I grew up probably like most people. You've heard the story 100 times from people in real estate where they thought the best way to financial freedom and a wealthy life was to get a great education and climb the corporate ladder. And I kept going from large companies to smaller and smaller companies. Each move I made, I was like, oh, it's a smaller, it's a smaller, it's a smaller, until I ended up at a tech startup with 100 people. And I was like, this still isn't moving fast enough for me.
Welcome everyone to our Hero Capital show. I'm your host Timai, and today I have an amazing speaker on the line with us, Miss Sarah Sullivan.
Hi.
Sarah is the CEO and the founder of the Sugo Capital, and also the founder of the Confident Investor webinar series. And Sugo Capital is an investment company focusing on connecting investors with passive income opportunities. With a background in business analytics and cybersecurity, she identifies promising real estate markets across the US. Since founded in 2019, Sugo Capital has participated in over $1 billion worth of real estate acquisitions and has acquired 39 apartment complexes as well as an oil and gas fund, and has a track record of over 21% average annual returns for investors with exit of several of these properties. And for the last 7 years, Sarah has raised over $400 million. That's a lot of money, Sarah.
A lot of money.
Yes, welcome. Thank you so much for finally be able to come on our show today. Really appreciate you, and I know you have a super busy schedule, and so I'm so grateful that you're on here with us today.
Well, I appreciate the invitation, Tim, and we've been orbiting in each other's circles, and we keep seeing each other at events, and we're both speaking on the same stages, and we keep meaning to connect on your stage. So thanks for having me in Dallas a couple weeks ago. You put together a fantastic room. I really enjoyed that event. The people in the room were really high quality, so kudos for you for that. And hi to everyone who I met during that event. Good to see you again.
Yeah, thank you. Definitely thank you for being there and speaking on our stage and sharing with everyone there our journey. So let's start here on this podcast. If you can share with us here a little bit about your background. How did you get started here in this real estate journey? We'll start with that, and then we'll get into the whole world of funds and real estate.
Okay, yeah. I grew up probably like most people. You've heard the story 100 times from people in real estate where they thought the best way to financial freedom and a wealthy life was to get a great education and climb the corporate ladder. And so, long story short, that's what I did until about the age 37. And so I have an MBA in finance and marketing, and I was working at tech companies and living in Silicon Valley. And I kept going from large companies to smaller and smaller companies each move I made. So straight out of college, I worked for Boeing Defense on the satellite program. And then each move, I was like, oh, it's a smaller, it's a smaller, it's a smaller, until I ended up at a tech startup with 100 people. And I was like, this still isn't moving fast enough for me. But what I was doing during that time is I was really trying to elevate myself within the company until I had children. And children take up a lot of time, right? And why have children if you're not going to hang out with them? And I realized I was not spending any time with my little 2-year-old and 4-year-old, and I was just working my butt off at my job. So I thought, okay, I need to do something different, but I didn't know what that different would be. And my father-in-law gave me the book Rich Dad Poor Dad, and I was like, okay. So I started researching real estate, and then Ari Mentor actually was the turning point for me. I got some sort of little pop-up ad on Facebook. It was, let's see what year it was, probably, I don't know, 2018, I think. So I saw the ad, come see this 3-hour talk about investing in real estate passively. And I was like, great, that sounds like what I heard about in the Rich Dad book. So I went and I was completely enamored with the speaker's story. And so it was a really specific story about going on vacation with their family. And when their family said, hey, Dad, I want to stay longer. It was the end of the 2 weeks. I want to stay longer. That he was like, oh, I can stay longer. And so that became my new goal. I was like, that I want all of that. I want not to be in an office at a job. I want to be able to extend vacations whenever I want. I want to be wherever I want. And I want to be with my family whenever I want. And I want to have the money to extend vacations whenever I want. And so that was my goal, to be on a vacation and have my kids say, we want to stay longer. We're having so much fun. And for me to be able to say, how much longer? Because we can just say how much longer. And so it took a few years. I went through the RE Mentor coaching program and I tried to take down deals on my own, my husband and myself. And after about 6 or 8 months, my husband was like, you know what? Working at Google, it's way easier than this. I'm going to go back to my job. And I was like, no, I was so determined and so inspired by the RE Mentor coaches. And I said, okay, I'm gonna keep going. I'm gonna keep going. I'm gonna figure it out. But this is actually really important because I kept trying to do it alone and I didn't get anywhere. And you didn't have any track record, so the brokers weren't taking me seriously. I didn't have any track record, so the investors weren't taking me seriously. I didn't know what I didn't know. And so after, I don't know, maybe it was somewhere between 9 and 12 months, I went back to, when I was no longer in the coaching program, I went back to one of the coaches and I said, hey, what else do you need in your business to make your business bigger? And they said, more capital. And I said, okay, I have an MBA in finance and marketing. I can build a marketing funnel. I can raise capital for sure. And so I tried, and the first one I was like, okay, I'm going to commit to 1 million. And I raised $125,000. I was so disappointed at myself. I was like, no, all that effort. And it was one check from my brother-in-law. And you get 100 no's, and I was like, I don't know if this is going to work. But the coach said, that was just your first try. You have to keep going. And so I said, okay. So the next raise I did, it was 1.2 million. And the next raise was 2.3 million. And so I was really thankful that they had the coaching mindset, even though they weren't my coach anymore, but the encouragement to say, just because it didn't work out the first time or within the first year, it takes some traction to get going. So that partnership was really important because I was able to borrow their track record to raise capital. They had a great track record and they already had all the infrastructure set up. They had the relationships with the brokers. And so I always tell people partnerships is really strong. And I know you completely teach that to your folks, Tim, because Ultimate Partnership, that big event you had was all about partnering and encouraging people to partner with each other in the room. And that is 100% key. And I wish that I had partnered sooner instead of trying to do it by myself for a year. But after I got into the partnership, it was about 1 year later that I was able to quit my job and we were on the trip and I was able to say to my children when they said they wanted to stay longer on vacation and we were on the beach in France and I said, perfect. How's another week? Let's do it, guys. And so since then, so that was in 2020. And since then, we've acquired, I think now the number is 47 apartment complexes, and we've sold seven of them. And we've had two foreclosures. And so we don't currently have, that's why I don't use the number a billion under management because we've sold some, we've lost some, but we've acquired over a billion. And we were somewhere on the cap table GP side for all of those. So we had a lot of lessons learned, and I'm happy to be an open book to everyone today. I've learned a lot. I've worked with maybe 10 or 12 different operators now in the real estate space raising capital. And like Tim said, I also started participating in other types of raises because I heard someone, it was like a 30-second clip, and they're like, hey, if you have a hat shop and you're only selling hats, you have to get a lot of new customers. But instead, if you sell belts and shoes, that one customer, you can make 3 sales to them in 1 day. And I was like, oh, yeah, okay. So I started asking my audience. We now have a database of about 30,000 investors. And so I said, I'm also investing in Forex. I'm also investing in oil. I'm also investing in this. Do you guys want to join me? And there's enough people who said yes. The things that they said no to, I didn't create funds around, but the things that they said yes to, I put it up on our platform. So today, our business structure is we have a customizable fund. We raise money into our fund and we deploy it out to different operators. So we're no longer operators. We're very rarely co-GPs. I'm no longer on the loan. I no longer put my earnest money out there. I wait until things have gotten to the point where they're ready for money. And then I turn on my systems and processes, and my team raises the capital. So that's where we're at now.
Wow, that was such an amazing intro. There's so much to unpack there, and you basically very eloquently said everything I wanted to say in that full
Okay,
3 days that you
interview done. But yeah, let's dive into whatever would be most interesting of that story.
Yeah, I want to take a step back and how old are your kids now?
Now they're 11 and 13. So my original goal was I wanted to be able to quit my job by the time my daughter was in third grade. But I think she was in first grade when I quit my job and went full time into Sugo Capital. So it was
And
it was harder to get started, but once I found what worked, then it went faster than I thought it would.
that's amazing. So a daughter and a son or?
Two girls, two girls.
Good. Awesome. I have
Mhm.
two boys. They're older now, 18 and 21, so much older than yours. But
And my, oh, I was gonna say my youngest, she's such a hoot. She comes with me to mastermind. She didn't come to Dallas because she had some other stuff, but she comes with me to masterminds. And she's, Mom, I don't know why you bother hiring people in investor relations. I can do it all. She said, I'm great with people. I can work a room, and I am excellent at math. And I'm like, you're 11. Just wait till maybe 16. You can start raising capital for us.
that is awesome. I love that. Yeah, and I love that you really doing this business for your family, right? And providing especially your kids for the lifestyle that I'm sure you wanted for yourself and be able to give our family that kind of freedom is just an incredible gift. And so kudos to you for doing that because I know I'm sure almost everyone here, if not everyone, the reason why we're doing anything in our life is because of our loved ones, those that are around us. And yeah. And your first deal raising 125,000, I can't even imagine when I learned that you raised over $450 million in a 7-year span. I'm thinking right out the gate, you must have raised millions of dollars. And so it's really cool. And it brings to us that, hey, you were there just like me, just like many of us who started our very first raise and we didn't raise much. How did you have a lot of conversations with people on that first raise and they just said no?
Yes.
Like, what went wrong?
Yes, I had a lot of conversations. And the saddest thing to me is that project got 47% annualized returns for
Oh,
investors when it exited. It was our strongest project. I was like, I only had one person in there.
oh,
But yeah, so when I first started raising capital, I didn't have like, an online funnel or anything like that, anything that I have now. I thought, wow, I live in Silicon Valley. I am surrounded by accredited investors. And I've had my career here for several years. And so people know me as a successful professional. And so it's going to be easy. I'm just going to tell people how great this is, and they're going to think, great, I'm going to invest. So that was my plan. And so to answer your question, what didn't go well is people didn't understand it. And if you're sitting down for 15, 20 minutes with someone and you're trying to explain how a syndication works, I knew in detail how it worked. And so I wasn't explaining it in a simple enough way. And a
mm,
lot of people didn't believe the returns. They're like, oh, that seems like those returns are too good to be true. And I was like, we could give you 10% instead of 20% annualized if that makes you feel any better. But yeah, also it was not everyone wants to be in the alternative asset space. And I was assuming everyone would want to, but a lot of people were like, they just didn't want to hear about it when I started talking about it. And some people, they network and they go to a lot of face-to-face events for their lead gen, and it works for them to speak face-to-face with people to start the relationships with investors. For me, it didn't work, and for one reason or another. And yeah, it was several projects in when I started doing my online education, and that worked really well. And the reason is because people were opting in to sit down with me for an hour and learn. And so they had the time blocked. They knew what they were getting into before I was like, hi, I'm Sarah. I'm in real estate. They signed up for it. So they wanted to learn. And so I think that's a big thing when people are that's a big thing in sales, whether you're offering an investment in for a business coach or for a real estate investment, you have to find the people who are actually interested. And so just dabbling around in life, it's hard to find. But if you have something online and people are opting in, they're there, they know what they're getting into, and they're there because they want to be there and they want to hear you talk for an hour or 90 minutes, whatever you're getting into. So I found that was a much better use of my time and energy and much higher conversions because people were already curious about what is this space in alternative assets.
that's awesome. All right. So, and then your second raise, you did basically 10x your first raise.
I was blown away. Yeah.
Yeah. What was different in your approach on your second raise?
Yes, so I got a sales coach, and she wasn't in the real estate space or in the investment space. She was actually a sales coach for multi-level marketing companies. But it was her coaching was around when you're doing a sale, if you're thinking about, I need this person to say yes because I'm going to make X amount of dollars on this person. She's like, it's going to come out all wrong. But if you focus on what value am I bringing and what opportunity am I bringing to this person's life, then it comes out all right. And there was more to her training, but in a nutshell, that's what she said. And so when I switched to really thinking, is this a good fit for this person I'm talking to? And what
Mhm.
value can I bring to their life? And if it's not valuable, just tell them, oh, it doesn't fit what you're looking for. And so I said no to a lot of people because I was listening to them and I said, okay, what are you looking for in your investment goals and your financial goals? And I was listening and listening and I'd say, okay, based on your goals, here's how this fits your goals. So I didn't start out saying, no, it's a 20% annualized return. I would say, oh, okay, this person really wants cash flow. Well, my project's only going to cash flow 3-4%. That's not going to move. So say, okay, this is not for you. Next. And so I wasn't trying to fix all the problems in the world with a hammer. I was trying to match the tool to the need of the individual investor. So it was a
Right.
shift. Yeah.
That's
And then
yeah,
all the
that's
words come out different, right?
yeah. I love that because it is very true. One of the big fears that new capital raisers or syndicators, fund managers coming into this industry is the fear of asking for money because it's a very deep-rooted fear for all of us. Yeah.
Mhm.
And as long as you're thinking about you asking for money, yes, you'll continue to have that fear until you shift your mindset of you're offering up an opportunity that
Yeah.
makes sense for this investor. This is something they should really consider, right? Not just
Hmm.
yeah. So I love that. All right, your growth from your first deal, second deal to now 45 raises or deals later, $450 million later. What was some of the big driver that accelerate that growth so much? Because I think you are like the top 1% of 1% of 1%. That's incredible growth. And so what were the major drivers you would say?
Yeah, so I found what worked for me. And so a lot of people try to duplicate what I do, but what I do works for me. And so I encourage everyone to find what works for them and then systematize it. And so once I pivot really fast. So if I did a webinar and it flopped and I got one soft commit, okay, that was Tuesday. On Friday, we're doing another webinar. And people opted out of my list because they were like, oh, we've already heard this woman before. But I was experimenting and I didn't treat it like, oh, I'm losing. I tried, it was like, oh, I need to experiment. I need to figure out what works for me. And I tried and I'd pivot and I tried and I pivoted. And then when I found what worked for me, then I was like, okay, SOP. And then
Hmm.
hired team to execute VAs, a marketing team, investor relations team, in order to just replicate what I did. And they tried to pivot and do things different because they thought this will work better. I'm like, maybe for someone else, but not for me. Do it exactly how it says in the SOP. And we're just going to do it exactly the same month over month for our lead gen. And we would do between 8 and 12 raises per year. And so it was almost launching a new raise every month. And then we would try not to do stuff in December because the holidays, except for oil and gas, it's always popular then. And we would try to take a month off in the summer so that we're not trying to raise money while everyone's on holiday with their families and that sort of thing. But it was really finding what worked and then systematizing it. And a lot of people say, well, I don't have the money to hire a team, but you can hire VAs part-time, contract hourly. And so we had multiple people in the beginning who were contract and hourly and overseas or in different parts of the United States. So I live in San Francisco, Bay Area. I did not hire anyone in the San Francisco Bay Area until 2 years ago, my COO, because it's just such an expensive pool
Yeah.
to hire from someone else, somewhere else. And along the way, we did try other things. We tried different strategies. We hired different marketing agencies to implement different things, but they never really caught on and they were like 10 times as expensive. And so we always returned to the original way that I had designed. But it was really putting it on repeat and hiring team members to put it on repeat because repeat is really boring if you're an entrepreneur. So I definitely lost momentum. Like, oh man, I don't want to talk to the 100th investor about the seventh project, multifamily real estate value add in Dallas. It's like, it gets repetitive, but other people enjoy repetitive. So having them in that role. Really, I encourage people, what I don't see enough in the capital raising space is our systems. And so a lot of people, they go to an event, they go to Tim's event and they try to raise capital in the room and then they're done. That was their thing for that quarter instead of, okay, I have all these people and how can I nurture them? And because I might not have another project for 6 months. So we have an email list and we try to send out 2 emails per week that are really value add so that people are always opening my email. We have a 20 to 40% email open rate depending on the content, that it really keeps us front of mind so that when we have something to offer, people are opening our emails and coming to our webinars. So we also do a lot of value add content and webinars that are not about an offer, that they're truly just a give and a value add to the audience. And so that also creates a lot of authority. And people know me very well. I had 2 weeks ago, I had a guy call me and he's like, "Oh, Sarah, I've been on your email list for 3 years." And I was
Mm.
like, "Oh, but we've never talked, have we?" And he's like, "No, I never reached out." And he's like, "But I just exited something and I have $14 million cash that I would like to place with you this year." And I was like, "Great, I can help you with that." But we had no, he was, and then I looked him up in my CRM and he had opened probably 60% of the emails I had
Mhm.
sent for the last 3 years. That's a lot of emails from Sarah. So he felt like he knew me quite well, even though I didn't know him. Creating those systems, and as soon as you get leads, you get people, you get them in something that keeps the relationship going so that you're not reaching out when you want money from them. It doesn't feel like a real relationship. Even though I don't have a real relationship with 30,000 people on my list, but it's the best you can do when you're doing the one-to-many relationships.
That's
Yeah.
phenomenal. All right, let's dive deeper into your marketings because you're obviously a marketing genius. So let's start. I hear that you have websites, you have funnels, you have a process that you nurture these relationships with the 2 times a week emails, the educational webinars to
Mm.
add value to them. And so let's start with how do you bring people into your funnel to begin with? What are your top marketing channels to bring investors in?
LinkedIn
Mm.
is the best channel for me. And we probably have, I was me this morning, I was like, "Oh, Tim's gonna ask me this question, so I'm gonna go look." And I didn't have a chance to look. We have a ton of lead magnets out there, and I don't even know where they are at this point because they've just been posted on podcasts and whatever. So I can see the lists inside my CRM and I see, oh, this one only has 450 people. Oh, this one has 5,000 people. And so I know which lead magnets there's. So it's basically lead magnets. So giveaways and live events. So the live events are always educational when we're doing lead gen, even though everything we do now is a 506C. I don't advertise or try to get people to come to an offer webinar. Instead, it's a value add webinar. So top of funnel are those lead magnets that are out there in the world, sprinkled around. And when people come in via a lead magnet, then there's a series, and it's depending on the lead magnet, is 3 to 5 emails in the series, and is explaining who I am and what we're doing and what a syndication is and how a syndication works. And then it puts them on our main email list, and then they start getting our regular emails. And then the other lead gen is to come to a webinar. If I had Tim come speak on one of my webinars, then we'd promote it all around. "Oh my gosh, we've got Tim Mai. Come on in." And so people will opt in from all the posting that we do. And then once they're in from an event, they have a nurture sequence, and then they go on our main email list to get the regular emails that everyone else is getting.
Awesome. For those
Yeah.
that don't know what a lead magnet is, can you quickly explain to them and then give them like an actual example of one of your lead magnets?
Yes. So the one I tried at the event was actually broken, and I was like, "Oh, well, how about
Oh
that?"
no.
The one I said on stage. But if you guys go to Kath, I think I saw Kath in here. Kath, if you want to put this in the chat, it would be helpful. But it's just sugocapital.com. No, it's sarahschecklist.com. It's also sugocapital.com/checklist. But if you go there, it has an image of a due diligence checklist. But if you put in your name and your email address, then you get an email that says, "Here is the PDF of Sarah Sullivan's Sugo Capital due diligence checklist." And then it also takes you to our due diligence hub that has more information in it. It has videos on spotting scams or how to read a PPM and that sort of thing. So at that point, someone has opted into my email list, and then in return, they get a document, they get emails, they get resources. And so that's basically what a lead magnet is.
Yeah, I just checked your sarahschecklist.com does work and it redirected to the sugocapital.com/free-checklist.
Yeah. Okay.
That's awesome. Yeah. So basically, it's a freebie, something of real great value that people would
Yeah.
love to have, and they're willing to exchange their contact information for.
Yeah. Yeah. Another example is we have one and it's our capital raising blueprint. And so we use that one more for our lending company, which I didn't mention, but we now have sugocapital.com/lending. And so I was like, oh, why didn't I think of this earlier? We're providing capital, we're providing equity for all these real estate properties. Why don't we also provide the debt? And so whoever is raising capital, if they want to know what my capital raising blueprint is, they're also going to have a project that needs some debt. And so that's my capital raising blueprint is a lead magnet for my lending company. Even though it's not directly talking about lending, that person wants both things.
Okay.
So,
And what would be the link to the capital raising blueprint or
oh
how to get?
man, I don't have it on the top of my head, but if you guys, how about this? My Blink card is in there. Here, I'm going to
Yeah,
put it in the chat. I'll add my Blink card. If you guys exchange your contact with me on Blink on the back end, it has a tagging system. And so I'll say to it, anyone who was added today on this date, then they get my capital raising blueprint. So
love
there's
it.
so many things you could do on the back end. I don't know how it all works, but my team does.
Awesome. I love
Let me
that.
grab my Blink card and I'll put
Okay.
it.
So LinkedIn is your number one tool. So you ever run ads before? Is it all organic?
No, I've never run ads. But I
Impressive.
did, I bought a done for you funnel from a marketing company, and part of it was to create and run the ads. And I just haven't gotten around to that. And that was like 9 months ago.
Okay,
I just got
got
too
it.
busy. But no, I've never run ads.
Okay. And who do you target when you marketing on LinkedIn?
So I target people who high net worth investors, but people who are already curious about the space. So I know a lot of people who are like Target and Trevor is the expert at this, right? But not necessarily people who are wealthy. If they're wealthy and they're super into crypto, I'm not going to talk to them. They're going to think that the piddly 20% annualized returns is laughable. And they're like, no, go away, because I'm making millions and millions every year in crypto. And so being able to see what they're interested in and if they're interested in investing, but that the investing they're interested in is low risk, then those are the folks that we'll reach out to. And then also the whole whoever we have as a speaker, when we're tagging the different speakers, or we tag different groups in our promotions and that sort of thing.
I see. Okay. All right. So yeah, so you find them on LinkedIn, you connect with them, obviously. What would the initial message to them be like? Like how do you get them from connecting with you into getting one of your lead magnets?
So when they connect with us on LinkedIn, nothing happens. At least I don't think it is, unless someone set something up years ago and they get some sort of message. But I don't think when they connect, anything happens. It only happens if they see the lead magnet out there somewhere and they opt in and they get on my email list.
Okay. So you
Mhm.
have enough of these lead magnets out there that yeah, once they connect with you, they
Mhm.
visit your profile, they see your lead magnets and such and get into your funnel. Is that correct?
Mhm. Yeah.
Are most of your investors there in the Bay Area? Are they all across?
No, they're all over. They're all over the United States.
Okay. And
Mhm.
are they mostly coming from the tech background like you were in or all over too?
No, actually, a lot of them are entrepreneurs or small business owners who are looking to exit their business in maybe the next 5 years. And so there's a huge wide range. You're like, oh, I never thought, but yeah, someone must run a company that does that for our communities. But when I talk to people on the phone, they said, oh, I have this kind of a company and I'm looking to wind down. My kids don't want it. I'm going to sell it. But I've been working, I'm 70 and I don't want to work anymore. That's the most
Mm,
common conversation is
I see.
they're trying to, in a low risk way, replace their income while also allowing their investment to grow. And so we all know that's a great thing about the syndication structure is that you get cash flow and you get appreciation. And so a lot of people like that duality, or at least they're putting some portion of their proceeds from their exit or if they're 401k into it just for the appreciation side of it. Maybe they'll
Mhm.
invest in something else for the cash flow to supplement the
Right.
cash.
That makes sense because I have heard you share that your investor avatar is your father, your dad,
Yes.
and so That
Mhm.
makes sense that a lot of your investors are the older business
Mhm.
owners that are looking, yeah, looking to grow their retirement income and growing their wealth. That's
Mhm.
phenomenal. Thank you. One of
Yeah,
the
and
things
on that, I think it's a really important point you made, Tim, is the avatar. Because a lot of people, and I think that goes back to answer one of your earlier questions, why didn't it work? Is when I didn't have an avatar and I was trying to speak to all people in my life, and it was like I didn't have a focused message. And so once I did have an avatar, and it was naturally whoever I was resonating very strongly with, which happened to be the avatar was my father. And they would say, I feel like I'm talking to my daughter. And I would say, I feel like I'm talking to my father. And we would literally say those words to each other. So that was like it just worked out that organically, that's what meshed for me. And so then once I realized that's what worked, then I could be very focused. And so I think that's really key. A lot of people don't get really focused on their avatar. Maybe you're still looking for it, but once you find it, then getting really focused instead of everyone out there, invest with me.
Yeah, I love that. And
Mhm.
yeah, I'm a huge believer of getting very clear on your avatar.
Mhm.
I often talk about Fisher investments, and I don't know if you have been watching them lately, Sarah, but they are now at almost $400 billion, yeah, in fund under management. And as you like anyone who know Fisher, they're very specific on their avatar. And I've watched them long enough, over 10 years now I've been watching them. So I get to see how the avatar evolves, but right now it's always been retirement. What has evolved for them is the amount of money that these retirees have. It used to be 500,000, and even before that was less than that. Now it's $1 million or more. And like
Mhm.
here is a $400 billion company being so specific, so focused on one avatar who are planning their retirement that has
Mhm.
$1 million or more to investable assets. I mean,
Mhm.
that's incredible focus. And yeah, I agree with you. One of the
Oh,
things,
I remembered something, Tim.
yeah,
So we did do paid advertising once. We hired an agency. This was 2 years ago. It was like I forgot because it didn't work well at all. But they took our investors and they did a lookalike campaign in Facebook,
yeah,
and then they had setters. And so I would get on the phone with people and they would not understand what we were doing, and they had no clue who I was. And I was like,
mm,
wow, I just paid for this funnel and these ads. And then I looked at the ads and it was like, no, this is all wrong. It doesn't bring in my avatar. And so I think if someone doesn't have naturally a marketing mindset, it could be hard because if you're hiring an agency, they can get it so wrong, even with really great instruction. And so, yeah, after 6 months, then we fired the agency because it was such a
mm,
waste of time, not even just money, but for me to get on the phone with all these people who were so cold, they didn't
yeah,
know who I was, cold
yeah.
traffic. So once if they go straight to the email list and then reach out to me when they're ready, then they're already warm by the time I get on the phone and I don't have to sell them. I just have to make sure I answer their questions.
Exactly. And I check out your website and you have your ROI calculator, you have your checklist, you have the invitation to join your community, and then you have your webinar series. A lot of people don't realize what all of those things much more than just about educating someone. It's how you position yourself. It's yeah, first of all, when people see you that you're out there being an educator, you're leading a community, there's a lot of positioning that's happening. So there's instant credibility, instant trust, and then
Mhm.
you educating them. You and I know would only follow trust, right? And for
Mhm.
trust happen, they have to know you and they have to like you. And
Mhm.
you are such a master at that know and trust. And so
Mhm.
it's so obvious that you won over so much of the capital. Yeah, so everyone, I highly recommend you go to Sarah's website, study, look at the whole website, but put a marketing hat on and really examining like why is she offering this and why she's positioning it this way. And Sarah, one of the things that you were so transparent about, even when you first introduced yourself on this call, you talk about the two foreclosures that you've had. And that same transparency carry over to your website. For most people, they would be hiding under a rock when they have even just one foreclosure or
It's going to come out eventually, so you might as well just talk about it.
yeah. Yeah. Share with us your belief around being at that level of transparency and having the courage to be right upfront about it.
Oh, that's just my personality. It wasn't a decision that, I got to make sure I tell people about this foreclosure. it's just how I am in life that you meet me and I'm just going to tell you about me. And there's the good and bad and the ugly about everyone. But if we're going to be friends, you might as well know it all. As yeah, that's just my personality in and out of business. And also, I think I was the biggest investor in one of those foreclosures, and so I knew exactly what it felt like. And my mom was in both of the projects, and then we have several others that are doing very poorly. And so there's a fear in me that maybe those will be foreclosures as well with different operators. And so I know what it feels like to the investors. And so why hide anything? The best thing I can do is say, look, this is happening. This is what it feels like for me. This is what I imagine it feels like for you. Here's all the things that we did and that we tried. And here they were for a lot of people have foreclosures right now. So the more that you explain things to investors, I found that the less angry they are. They understand that you tried and all the things that you tried. And then also new investors who maybe weren't part of that, if they know what you learned and how you adjusted since then, they're like, oh, okay, she didn't just press the easy button and she was lucky she didn't get any of those foreclosures. Okay, she's learned a lot. And we very specifically have changed projects we'll get into because there was a pattern in not only those foreclosures, but a lot of the foreclosures that we saw and the other projects that are in trouble in our portfolio.
Have you done like a webinar series or at least one webinar around the lessons you've learned?
Oh yes, we've like exhausted for the last year. And we have open Q&As as well with our investor community where I'll say this is the topic we're going to talk about and everyone gets to come meeting style like this and we talk about it and they share their experiences as well. But yeah, and some people on our list didn't see it and so they said, "Oh, you only talk about the good stuff. What about that foreclosure?" I'm like, "No, we've been talking about that foreclosure for 18 years, 18 months, excuse me." Yeah.
I love, yeah, I love your love of transparency. The very first day that we met on stage, you were very open about it. I'm like, wow, she's so awesome. Because
Mhm.
yeah, I mean, a lot of people, and we're gonna see a lot of this in the next couple of years.
Oh
We're gonna
yeah.
we're gonna see who are truly the good, honest, high integrity, high transparency operators out there. And you and I both know there are some that have gone through foreclosures and don't say a thing, right? And nobody
Yep,
knows.
it's hidden. It's not in their
Yeah.
track record. They've
Yeah.
hidden it. Yep, they're out there.
Yeah, yeah, and yeah, it's unfortunate, but that's I think that one of the things that you and I are both a huge believer in is having this community of fund managers coming together, you learn from each other,
Mhm.
and know who are the good operators that we can, come behind and support
Yes.
and partner with, and who are the bad ones that we should all stay away from, right?
Hmm.
Let's put them out of business because the more good people that we can have in this business, the better it is for all of us and all of our investors. And yeah, let's
Yep.
talk about a lot of people, for you to have come from the Oriental community and went to the partnership route versus the GP co-GP route. I was like, I'm so glad to hear that because so many people I talk in so many people I talk to in the Oriental community, it's hard for them to click to see that there's a better way than going and sourcing your own deals.
Mm.
And so let's talk about that. I know you and your husband started out trying to find deals and talking to
Mhm.
brokers and it was very challenging. I know you touch on it a little bit in your intro, but if you can go into like, what are the things that you were running into that had your husband saying, you know what, I'm going back to Google and have you say, I need to find a better way. Well, yeah,
Yeah, so it was, we couldn't get a deal under contract, but so A, the results were null, but B, it was the level of effort. So I know that our mentor teaches this, all the coaching programs teach this, that you have to underwrite 100 deals in order to
yeah,
get one under LOI. But since we were doing that, we'd put the kids to bed and then we'd work for a couple hours in the evening. And I was the one who would go look for stuff and then I'd contact the broker and I'd get the information. And then my husband, he's an engineer, so he had this underwriting templates and he would plug in the numbers and then you play around. Will this one work? So I was the relationship side and he was more the number crunching underwriting side. And so we just never found one that worked. Or if we found one that worked, the broker wouldn't respond to us, probably because someone was already like, "Hey, here's 10 million on the table." And they knew that we hadn't done one before. Yeah.
I see. Okay. And yeah, and then yeah, and so transitioning out of that, you started to you asked your mentor such a great question, and a lot of people don't realize that what is it that you need help with in your business, right? And your mentor said capital, and it is very true. The bigger the operators out there, what it means is that they need to do more deals, they need to do bigger deals, and the more deals they do, the bigger deals they do, the more money they need. There's no such thing as someone who, maybe there is such a thing, but someone who has all the money for all the deals that they want to do, right? It's very rare. Most everyone in their growth stage will need help with capital, and it's like all of us who choose to focusing on helping people helping bring capital into the deal. The If you look at the entire deal progress or journey, right, from starting from zero to calling brokers, underwriting deals, to finally getting one under contract, gone through the due diligence, that can easily be 6 to 12, if not 24 months, or you have a deal that now meets everything and you're ready to go forward with closing. And yeah, and so you can be the person who start from day zero like that and be willing to sacrifice that 12, 24 months, or you can be the one that say, hey, Sarah already has a deal, right? Or if I just come in and I can help her bring capital to the projects that she's working on, now instead of 12 to 24 months, it could be 30 to 60 days that I can
Exactly.
do a deal, I can make money. And yeah, and so yeah, a lot of people don't realize how much leverage that is. As a capital raiser, a capital connector is what I call
Mhm.
us. It's like we connect capital to deals, right? And
And it's much lower risk. So it was the whole business is emotional, right? But it could be pretty intense in the beginning. So the first two, I wasn't on the loan. I didn't have my earnest money in there. But then when I started to properly partner with people, I was on the loan. I was putting up earnest money. And so, like the timing of, okay, do we need to put more money in now? Did we complete? Are we ready to go hard with our money? And okay, then the foreclosures that we had, I'm on the loan for one of them because they're from 2022 when I was still co-GPing and partnering. It's great. Now the lender's wondering if there's a $3 million deficit between the loan amount and the value of the property. And they're like, who has some money out there that was on the loan? Great. We'll see where that goes. But that level of risk and liability, even though it was non-recourse, there was this little clause we didn't see. And
there's a loss.
yes, little clause that was very important, apparently. But as a fund manager, yes, you are responsible to your investors, and there's a sense of liability if the project doesn't go right. You have a responsibility to your investors. However, that's the extent of my liability. So, raising capital as a co-GP, you have the liability to your investors, and you have other liabilities being a co-GP. And so, emotionally, it was just easier to not be on the loans, not be putting up earnest money, not be wondering, helping negotiate the LOI, the PSA, and wondering when we. So basically, with my partners, I say, give me a heads up when you have an LOI, but then that's all I need. And then once you have a PSA, okay, then we'll turn it on and we'll go and raise capital over the next 45 days. But before, you might be looking at 20 different properties. And now I'm only looking at one that we got the PSA signed. So I really do enjoy that piece of it. Someone has to get the deal and someone has to run the property. And it's just, doesn't bring joy to me. It's much more fun to work with investors. But other people think it's more fun to run the properties and they don't want to talk to the investors. And so finding that match is what partnership is all about.
Yep, exactly. And yeah, and really, whichever way you go, this business and what I love about this commercial real estate business, it's all about partnerships, all about teamwork. It's nothing like that. I came from the single family home war, and we can be a one-man band, on
Yeah.
all the deals that we do, right? But
Yep.
here, yeah, here in this war, I love the teamwork and the partnership aspect of it. Yeah, so yeah, I'm super glad that you and I both found this journey and both focusing on being a fund manager.
I think if you don't mind, Tim, I'd like to say two other big benefits of being a fund
Yes,
manager.
yes, please. Yeah.
One of them is diversity. And like when I was co-GP, I didn't want to put my investor in 8 different portals with 8 different processes for them to try to find their K1s and whatever it was. And so I was really focused on who I partnered with, but then it limited me to wherever they lived in their location of genius. But as a fund manager, you're writing a check. And so you you can say, I want the best operator in Dallas. I want the best operator in Columbia, South Carolina. I'm looking and I think that Raleigh, North Carolina is really emerging. I want to find the best operator there. And so it allows diversity of locations and diversity of operators. So I love that it allows that diversity. It makes it really easy for that. And the second one is that it allows us to be more nimble. And what I think happened over the last few years is folks who were operators, they have more full-time staff. And so a lot of times you make money by closing deals because you're making your acquisition fee. And a lot of
Mhm.
GPs don't make money along the way. So you either have to buy or sell a property to maintain whatever system you have with all of your employees. So my opinion on what happened over the last few years is that people kept doing deals because they had to keep their employees because they were big companies. And some people survived and some people didn't. But as a fund manager, primarily with contract VAs, if I did way fewer properties and projects the last 2 years. And so it's really easy to scale down. And then I see what's coming. It's really easy to scale up. And so it's easier to be flexible. I didn't feel like I got to do a deal in order to eat this month. It was like, okay, it allows more flexibility and choice in what deals you do and how you do them as a fund manager versus a true operator and co-GP. So that's another thing I
Yeah,
like.
that's awesome. Yeah, and a lot of people don't realize it, but some of these operators, they have over 100 employees, some even over 300 employees. It's a huge beast to take care of
Mhm.
every month and feed every month. Yeah, anyone who run any sizable business, you know what a pain in the butt that can be. And having a lean and mean and you can scale up, scale down business like what Sarah was talking about. You can only find it here in the fund manager business, really.
Yeah.
Yeah,
Mhm.
incredible business. All right, Sarah, before we open up Q&A from the audience here, share with us what are you up to now? What kind of deals are you doing now? Fund you're running? What kind of deals are you looking for? Yeah, share with us a bit about
Yeah,
that.
yeah, thank you. So we are excited about what's coming in the next 6 to 18 months. I think that if you're watching what the rents have been doing and what CoStar is projecting, we might not be at the bottom, but trying to time the bottom, you're going to miss the bottom. So getting in now, there might be a little bit more going down, but you'll be already in the game when it's going up. So I think it's a great time to get back in. So we are rehiring and getting back into lead gen to increase our pool and increase our interest again in order to get ready to raise more capital than we have before. So the type of deals that we're looking for, we have a ton in Dallas, so we're not looking to buy more in Dallas, except for one particular partner who is a really great friend of mine and does exceptional in this space. But other than that, we're staying away from Houston and Dallas. But we really are excited about the Carolinas. So multiple cities in the Carolinas and those markets that we all know what they are, but are they going to be going? Oh, okay. Whoa, here we go. Populations are increasing, jobs are going there. So it's really fun to watch the different markets that are really increasing in jobs and population. And so there's two buckets that we're going for, and it depends on the market which bucket we choose. But we like the really low operational plan projects. It's already going in and hey, somebody remodeled this 3 years ago. It's still fine. They just were upside down in their capital stack or with their private equity group or whatever it is, and we're getting to pick it up for 30-40% below what it sold for in 2022. And so it's really just redoing the capital to make it healthy, but then also there might be some operational things to bump it up maybe 10% on occupancy, but not a lot of, oh, we're going to raise 50% of the project we have to raise in order to all this capex to redo all the kitchens and all that kind of big overhaul. I don't think we need that right now during a reset. So we're looking for projects that are operational value add that are already looking pretty good. And then, so that's with most people out there. And then there's just this one operator, and they have a special skill to go in when it's more like 50-60% occupied and really turn it around.
Mm.
And so I wouldn't be broadly looking at that except for this one operator who does it so well, and then they achieve super strong returns for their investors. So those are, yeah, projects where because we've seen a lot of this where someone lives in California and they're trying to manage a property in Dallas and
Yep.
they have a dental practice in California. So it's not like they're flying out to their property in Dallas and it's just gotten out of hand and they're not making any money on it. So they can't hire the right people and occupancy goes down because they don't have marketing budget and they're bad property, all those things. So it's to pick it up off market. So a lot of people have property management companies now who they're vertically integrated operators. If they weren't buying a lot, they really grew their property management side of their business in order to keep revenue coming in. And then they get to see, oh, which properties can we try to buy from the owner that we're already managing it, but we don't have the resources. But if we buy it from them, we get a good price and we bring some CapEx, we fix it up. So if you like that as well. But we
Very good.
definitely are only working with people who have had more than 6 exits. So when I was starting, raising capital. I was working with people who were more experienced than I was, but they weren't like the huge operators that had 100, 300 people because they didn't know who I was. They didn't trust me that I'd be able, and rightly so, I couldn't raise any money in the beginning. But now that I know very predictably, I can look at a project and I can say, I'm going to write you a check for this much money. I can now work with the more experienced, larger, more established, lower risk operators. And so we only work with teams that have had at least 6 exits and who already own 5 or more properties in the market that we're looking to join them on.
I see. Why
Mhm.
six? Why the number six? Why not five? Why not seven? Why six?
Why 6? It's also not a hard number. If there were 5 and if it was excellent, I might take a look at it. I don't know. That's the number I chose. That's the number that felt good. I think
Yeah.
probably because over time, when I looked at people who had 5, I feel like you can get lucky with a few, or if your exits were all by February of 2022, then you didn't really get through some of the
Yeah.
stuff that some of the lessons learned. And we don't sit below private equity anymore. And so that's another criteria for our projects. If there's private equity in there, sometimes I bring the private equity, so then I'll be a co-GP on those. But then if I don't, then I can't be part of the capital stack because that puts too much risk for our investors who are going to be the common equity LPs. Yep. So those are the main projects. And then the debt is very important. And I don't have one rule about debt, but I have a lot of rules about debt. And so when I see what the debt looks like, that often causes me to run away or get really excited.
I see. And
Mhm.
then I know you have your lending fund now. Tell us a
Mhm.
bit about that. What have you decided to go in that direction? Who are you looking for there? Are
Yeah.
you looking for fund of funds? Are you, yeah.
Yeah, thank you for that. So there's 3 areas around that. So the kind of debt that we're providing, so we can broker any kind of debt, but the two products that we really have at Sugo Lending Partners for luxury fix and flippers is giving a loan and there's no mortgage payments for 2 years. So it's really great for if you're doing a fix and flip, but the numbers maybe between $2 and $7 million. So that's one product that we offer. And the other is for multifamily, but it's also no payments for 2 years. And so what we have in the pipeline right now are a lot of projects where people need to, if they have to keep paying their mortgage, they're going to go under. It's not working for them. They don't want to sell yet because it's not the right time to sell. Or folks who are doing development, or folks who are doing a larger value add project. So anything where it's multifamily, office, where no payments for 2 years. So it's not that it's interest only, is that there are no mortgage payments for 2 years. And so the interest is high, but you don't have to pay it for a while. So those are our two core products. And so folks really love the no payments for 2 years. It helps you if you're not having income for one reason or another on your project. And then we have a debt fund. So if people want to join, then they can be part of the money that's being lent out. And we cycle the money over and over. So some people say, how can we make any money if you just gave an 8% loan? How are you going to give us 8%? But it's because we cycle it. So it comes back and we cycle it back out, sell the notes, etc. It's a new
Right.
space for us, and it's been super fun, especially because it's the real estate investors we're working with are so excited about the product. When you're looking for an investor, okay, they're sizing you up, and okay, and you're asking for money from them. But in the lending space, we're giving money to someone, and they're so excited about our terms. And I had one guy at a conference, and he picked me up, and he jumped around in a circle, and he's like, "Oh my gosh, you completely changed the profitability of this project." I was like, oh, that feels great. It's such a great space to be in.
And with them, with you giving them no mortgage payments for 2 years, like how do you pay distribute for your investors? And what is that distribution like for the LPs that are investing in your fund?
Yes, so because some of the so if it's a lot is because of how they cycle. So some of them are exiting that have already been in there because I partnered with someone, so it's not a brand new fund, it's just new to me. And so some
Yeah,
are exiting, and then also not all the loans. So the loans that we're giving, not in the debt fund, but the ones that we're giving out of another pool are the no payments for 2 years. But within the debt fund, some of them they do have monthly payments, and then also we turn around and sell the performing notes, so we get an arbitrage.
I see. I see. Good. Very
Yeah.
cool. All right. All right, Sarah, I know you gave out your info earlier, but yeah,
Yeah.
for those that want to reach out to you, connect with you, whether invest with you or partner with you as a fund manager, where's the best place for them to go?
Yeah, I'll put my link in again, and then also the sugocapital.com/lending website. It has, I'm gonna put it there as well. At the bottom, it also has my all my contact information.
Great. Yep.
Yep, there it is. Sarah and
Excellent.
Brandy. So I'll put that in the chat as well. So you guys have all the ways to connect.
Yeah.
Feel free to reach out, whether it's if you want to chat about loans for your project, would love to do that. And then if you want the capital raising blueprint, connect with me on Blink, share your information with me, and then my team on the back end, they have access to that CRM and they'll shoot you over our capital raising blueprint. It shows everything soup to nuts about choosing an avatar, having a funnel, and having follow up and follow through during the closing process.
Excellent. Thank you. Thank you for
Yeah.
your generous gift, Sarah.